Hi, I'm Lawanda, and I want to talk to you about withholdings, federal withholding specifically. A lot of times I see individuals have never adjusted their federal withholding and they end up owing a lot at the end of the year because they don't look at their withholding throughout the year. And what do I mean by withholding? Whenever you start a job or whenever you're changing positions, you normally have to fill out a W-4 form. Most people forget about that form because they fill it out the first time they get employed and they don't think about it again. But in 2018, that form became very important because you no longer could choose one exemption, two exemption, three exemptions, 12 exemptions and play with your withholdings from your federal. That changed. So when the Tax Act and the Job and Tax Act came out in 2018, the new W-4 form was changed in 2020. It was pretty quiet because a lot of people didn't talk about it. I think companies may not have educated their employees that they should go and revisit it, because if you never changed it after it changed in 2020, your exemptions pretty much changed to a single individual with no dependents. And that would go for married couples and everyone. So that's why people started getting less money taken out of their check for federal taxes, and they didn't understand why they were owing so much. So I'm going to try to educate you on how you can update your W-4 by showing you the form itself. So let's get to it. Okay, so this is the form in its glory. I want you to go to your W-4 when you're logging into your company's payroll system, whatever they're using, Workday, not sure, but whatever it is they're using, log in there and you'll look for a W-4, and this is what it is. So this is all standard, just your name, your address, those kind of things. That's standard within the form itself. Let me roll down here. Okay, and then you'll look and see that people who have multiple jobs or they have a spouse, they're telling you how you can adjust this, because this is all just the federal. This has nothing to do with states. I just want to make that clear. So we go down here and you can also change your dependent credits if you based on income, if your total income is over 200,000. And again, this is all meant to help you spread your tax liability throughout the year. So that's what this is about. So you can actually make an adjustment on your dependents and try to factor in how much money that's going to cost you throughout the year. But the biggest part that I think people are really missing is this part. It's the step four, the other adjustments. If you itemize, this is gold, because this allows you to be able to have your same amount of money coming out throughout the year, and you use your money through systematically, and then you're not getting this gigantic refund at the end of the year. So if you look at this, step four, other income, this is income that you don't have withheld from your check, but you know you're going to receive. Like say you get money throughout the year for side jobs, things like that. You can actually factor that in and estimate how much that money is. But the big one for itemized deduction people, like if you're paying mortgage interest, taxes, charitable contributions, what I did when I did mine is I took my previous year's itemized deduction amount and I put that total in that line 4B. I put it there, and it worked out beautifully. It just spread my tax throughout the year, and I didn't have those issues because I pre-planned this. But again, I looked at this, but a lot of people did not. If you don't itemize and you're not having enough taken out, this is what I tell a lot of clients on line 4, extra withholding, that you should have if you're short $1,000, you should have an extra $25, $50 a paycheck, whatever you can afford to come out, and you would put that number here. Say you want to put $200 a paycheck, you put that here on your form, and then that would come out of your paycheck. You'd see it as extra withholding on your paycheck, and that's going to lower your tax liability. These are gold, and this is something that people really were not educated on because companies probably didn't take the time to tell people, hey, you can actually save on your taxes or not spend as much. If you realize if you're not single with no dependents, then you need to be making adjustments on your W-4 to lower how much you owe the IRS at the end of the year. The rest of this form, outside of just signing these documents, the rest of this form is just showing you the instructions. And then I want to show you something else. Here's the multiple jobs worksheet in case you do have several jobs and you want to estimate how much money you have coming out for all those jobs, because that will impact you. But the part I wanted to get to was for those who itemize. This is just for you in your calculation. So here, tips, which now you know in 2025, a certain amount of tips it phases out over a certain amount of income you make is tax deductible as well as overtime. So those two lines are here. You'd be estimating that this is income that's not planned, that you'd actually have estimated. And then there's seniors. So this year also seniors get an exemption. Their personal exemptions have increased to $6,000 a piece. And so then you go down, and this is just all for planning. Okay, so itemized deductions. Here we go, line 6. This is all your medical expenses, charitable contribution, your taxes that you pay on property, all of those things. And it adds up. And that's that total that you would go to line 4B, which is what I suggested. So, and then, of course, you come down, and these are higher thresholds when you're looking at married, filing, joint, and then they're giving you some of these thresholds for those who are itemized. So that's that part. But line 11 is a standard deduction section for this year. These are the numbers for this year for 25. And again, that helps you because again, if you're not itemized, you can write off about $1,000 worth of cash contributions that you make to nonprofit organizations, which is actually a positive thing. So I just wanted to show you some advantages to going to your W-4 and adjusting it. It will help save you money at the end of each year if you make sure you have enough money coming out for IRS. And I also suggest that you go to your applicable state and you update that state withholding form as well. Um, these are very important. You don't want to look up and end up owing all this money, or if you had no taxes coming out, or if you have the wrong state taxes coming out, that's going to cost you because you have to buy another state package in order to do that return for a non-resident and do the current state that you live in, unless the state you live in does not collect taxes for income. So these are just some tools to help you out because, again, a lot of people uh, they look at April 15th, which is the day you have to file. They look at it as a windfall of money they're getting in when you're really giving a tax-free loan to the federal government. And when they owe you money, they're not in a hurry to give it back to you. But when you owe them money, they come knocking. So I just wanted to share these few tips with you. I hope if you like this video that you like and subscribe. I am at Lawanda _ your CPA on YouTube. I'm Lawanda Benefield LLC on Facebook, Instagram, on LinkedIn. Of course, I have my webpage, which is www.lbllc.net. So until next time, I hope you have a wonderful day. Thank you.